Starpoint Properties develops real estate nationwide. They're headquartered in Beverly Hills, California. They're going to be focused primarily today for today's presentation on one of their newest multifamily developments in an opportunity zone in Long Beach, California. There's Neil. Neil, how are you doing?
Hey, Jimmy. Thanks for having me. Doing great this morning.
Absolutely. I know we're running a little late here, but that's okay. We got a little bit of a buffer built into the schedule, so I won't hold it against you. I know you've got a 10-minute segment here, so I'll start the timer now, and please take it away.
Perfect. Thanks, Jimmy. Thanks, everyone, for attending. It's a pleasure to be able to present to you today. My name is Neil Sherlock. I am the VP of Capital Markets for Starpoint Properties based in Beverly Hills, California. I have two primary objectives for this presentation. First, I want to introduce you all to Starpoint, our history, track record, and what makes us a great partner. And second, I want to discuss our current QOZ offering that we just launched at the end of September and are currently raising capital for. So Starpoint, we were originally founded 25 years ago. We have completed over $1.5 billion worth of transaction volume during that time frame. We've been very successful with our investing, delivering weighted average returns to investors of approximately 25% per annum during that time. And not surprisingly, having an extremely high rate of reinvestment from our LPs as well. We've done deals with institutional investors, including Goldman Sachs, KeyBank, but we also have our retail base that we've done dozens of deals with over the years as well. Firm started as a small family office and has grown significantly over the years. We're now vertically integrated with acquisition, development, property management, and investment management capabilities and expertise. And our current portfolio consists of 30 properties, primarily multifamily and other commercial, and is worth slightly north of $1 billion in total market value. And operationally, we employ over 60 real estate professionals. We're led by a senior management team that has decades of combined experience, and many have come from other large, recognizable, and reputable real estate firms. And our offering to investors, I think, is pretty unique because we are a fully integrated real estate acquisition, management, and development platform. So we offer that institutional discipline, but at the same time, we also have an entrepreneurial vision. We are an established machine in sourcing, closing, and managing assets, and consistently delivering above market returns to investors. And I think that's a function of a few different variables. First, we're incredibly disciplined with our acquisition strategy. We take a very long-term perspective and evaluate the individual merits of each asset, sector trends, market dynamics, and the broader macroeconomic environment. We have our proprietary systems and underwriting processes that we've developed to minimize risk and identify only top-tier investment opportunities. And then we also have a deep network for sourcing deals, both on and off market. We get first looks, last looks. And in fact, to illustrate that point, we've evaluated over $3 billion worth of QOZ opportunities alone over the course of the last 18 months. Everything we do here is designed to just acquire great real estate that we believe in. And we prove that as well by investing alongside our investors in each deal. And that's something that we continue to do with our QOZ opportunities as well. I won't spend too much time on these slides, as everybody in attendance is probably very familiar with the program at this point, but I have spoken to a number of financial advisors and RIAs that have told me that this is the most impactful slide that they've seen, since it illustrates just how attractive QOZ investments can be. It's a simple projection based on a 15% annualized return for the 10-year hold period, which happens to be the level that we target for our funds. And any increases to long-term capital gains, as you can see, greatly amplify the benefits of the program. So Starpoint, our qualified opportunity zone funds, we launch all these funds as single asset vehicles. And we launched, this series of vehicles to grant investors an opportunity to A, take advantage of the tax benefits of the program, and B, to do so with a highly experienced, fully integrated firm that has a terrific track record. Our typical deal size is about $25 to $75 million in total capitalization. And the cornerstone of our investment philosophy is to acquire attractive real estate assets that exhibit a compelling risk-return profile in markets that we are intimately familiar with. Every asset must meet our underwriting standards. If it happens to be located in a QOZ, even better. For us, the designation as a QOZ is really just a kicker. But first and foremost, we do focus on the merits of the real estate. We primarily utilize the build-to-core strategy with a focus on developing multifamily and certain types of industrial properties, which have been some of the best performing real estate segments for the past few years and are expected to continue to perform or outperform the broader market in the coming years. And we do so in some of the most attractive and sought after markets in the United States. We look for markets that exhibit strong fundamentals, that have high barriers to entry, and we look for infill locations near major populations and anchor businesses and transportation infrastructure. In addition to that, we also look for other potential value drivers, whether that's tax abatements, grants, or other subsidies. We launched our first 2 QOFs earlier this year, and we are now on our 3rd offering, which is our Long Beach project. That said, we do have a very large pipeline, so we'll continue to deliver more opportunities to the marketplace over the coming quarters. Which brings us to our existing or our current deal that we're raising capital for, which is the LOCUSTOZ fund. We launched this in late September after receiving site plan approval from the city of Long Beach. It's projected to be a 7-story, 108-unit multifamily development project with approximately 1,200 square feet of retail space on the ground floor. As you could imagine, it meets the criteria we're looking for. It's an attractive infill location in a high barrier to entry submarket that has extremely strong fundamentals. In fact, Smart Growth America, which is a 20-plus-year-old 501c3 that provides data on urban planning, ranked downtown Long Beach as the top 3 market for multifamily rent growth. This asset happens to be 1 block east of Pine Avenue, which is the main corridor of retail, and it has a vibrant hospitality and restaurant scene as well as other residential amenities. Total project size is approximately $48 million total capitalization. That's expected to be about 35% equity, or about $18 million total for the capital raise, and 65% leverage on the project. And as of right now, the project level returns are penciling out to about an 18% IRR and just under a 4x on the equity multiple. So the project is located at 7th and Locust Avenue, hence the name Locust, on slightly over half an acre in the North Pine neighborhood of Long Beach, which is just west of the Arts District. And it has, as I already mentioned, a significant amount of retail and restaurant activity in the area. Once it's completed, it'll be 7-story Class A building with 108 units, 1,200 square feet of retail, 135 parking stalls split between 2 subterranean and 2 above grade levels. And some of the amenities include a fitness center, a clubhouse with a pool constructed on a podium deck, along with barbecue grills and seating areas. And most importantly, this asset is 6 blocks off the water. So we have a rooftop deck that'll offer unparalleled views of the ocean and the skyline. And then I think it's important to note too that none of our units are actually deed restricted. These are all market rate units and not subject to any AHI. And I threw this one image in here as well. We have obviously much more robust design plans, but I think this kind of illustrates what the vibe of the building is expected to be. More on that if for any follow-up. So moving forward, these are just a few renderings. I'll flip through these pretty quickly. But we really like this market. I think there is a lot to like. California is constantly faced with an ongoing housing shortage. And on top of that, you talk about the year-over-year increases in home prices to the tune of about 18.7%. Needless to say, this lack of supply and these expensive home prices push a lot of residents to rent. And not surprisingly, across LA, our vacancy rates are about approximately 4.3%, and that vacancy rate in Long Beach is even lower. It's about 3.5%. That said, year-over-year rents in Long Beach have increased about 5.5%, just shy of 5.5% as of July 2021. And as of right now, their rental prices are actually still at a 15% discount to LA averages. So we anticipate there being additional room for growth as investments continue to pour into the city. A few other notable statistics about Long Beach. There continues to be positive net absorption for multifamily quarter after quarter in the area. You're seeing historically low cap rates on sales comps. We're talking 4% cap rates or less. And then we have a really attractive demographic population. It's relatively young and wealthy, with the average age slightly under 35 years old, and the average household income of approximately $89,000 per year, which is about 20% above the median household income in the state of California. The location is very attractive for a number of reasons. It's an urban setting in coastal California. It's centrally located between LA and Orange County, so it's highly desirable and prime for growth. This area, Long Beach, has actually been a focus of investment for a lot of other major developers. Some of that stems from the preparation for the Olympics in 2028. I was actually out there a week ago, and there were multiple cranes across the skyline, which is always a good sign that you're in the right area. And speaking of, that skyline also includes the recently completed 35-story Shoreline Gateway building, which is now the tallest building in Long Beach. And although our project offers parking, a car is not really required, as this is easily walkable with a walk score of 96. It's a short walk to the promenade, the City Place, which has 450,000 square feet of retail, the convention center, the aquarium, and a ton of other sites and attractions that are in the immediate vicinity. That said, transportation infrastructure, if you do drive a car, 7th Street, which is one of the cross streets of our asset, is actually a one-way feeder into the 710 freeway. So it's really easy access to the 710, as well as the 110, the 405, the 605, which makes commuting to downtown, to the west side, or to Orange County incredibly easy. And if you aren't a driver, there's actually really convenient public transportation as well. Very easily accessible. The Metro Blue Line is only 2 blocks away, or about a 4-minute walk. The other thing that we talked about in addition to transportation infrastructure is what are the employment anchors. Obviously, Greater LA is the 2nd largest metropolitan area and economy in the country, with an extremely diverse employment base. So there are logistics companies, aerospace, government, tech, media, all easily within reach to these job centers. And speaking of the specific employment hubs here in Long Beach, just to name a few, we've got the ports. Port of LA and Port of Long Beach are both about 5 miles away from the asset. These employ approximately 316,000 people and contribute about $200 billion of trade annually. In addition to the ports, we've got the 2nd largest university in the Cal State system, which supports 40,000 students and faculty. That's only 5 miles away. We've got the 400,000 square foot convention center, which generates another $1 billion to the local economy, drawing in hundreds of thousands of visitors to the city each year who eat, sleep, and shop at the local establishments. And then also, I think it's important to note that Long Beach is really reemerging as an aerospace hub, with the likes of SpaceX, Virgin Orbit, Relativity Space having invested materially in the area. SpaceX was actually earlier this year on Pier T. And then lastly, as I mentioned earlier, a lot of investments being made in advance of the 2028 Olympics. This includes new hotels, retail, and entertainment. So I know we're tight on time, so I will flip through the floor plans here pretty quickly. Again, I can follow up after the call. People are more than welcome to reach out to me, and I can share the more robust deck. But we talked earlier about a built-to-core strategy, and this slide really just illustrates how that's expected to play out. We received site plan approval on the 16th of September and expect to start construction in early Q2 of 2022. We expect to wrap up construction by August 2024, at which point we will place the asset into service and start generating cash flow to investors. In early 2025, after we stabilize the asset, we expect to refinance it, pay off the construction loan, and distribute out the residual proceeds to fund investors. And do so in a tax-efficient manner. And in the following years, you expect to receive strong and escalating current income and tax-advantaged current income, given our structure, from a stabilized Class A core asset. And then finally, upon final disposition, after the 10-year hold period, to ensure that investors get the maximum benefits of the program. Currently pencils out to an 18% IRR. This includes our 3% construction management fee and is based on construction hard costs. And I think it was mentioned a few times yesterday, but we are also the developer, and therefore there's no double promote. We believe there's some upside to these projections as well, based off of where our construction loans and market rent and sales comps are coming in at. They're on the construction loans alone, that's about 100 basis points tighter than what we project out. And then lastly, we think our terms are very competitive compared to other OZ deals. We offer an 8% preferred to investors. Our asset management fee is fairly modest at 1.5% of equity annually paid by the fund. And we are highly incentivized to outperform based on our waterfall structure. And then last couple things. All right, so we align ourselves with investors. We co-invest between 5 and 10% of the total fund equity. We launch our vehicles after projects are fully entitled. So this project is fully entitled and ready to go to construction. We actively manage all of our assets to identify additional value enhancement opportunities. And then we also partner with Juniper Square for our investor portal to make the investment process easy, efficient, and all paperwork is completed and submitted electronically. And we accept capital on a rolling basis to accommodate each investor's 180-day deadline to allocating their gains. All right, Jimmy, I went a little bit over, but I think I've got it all out there. So if anybody has, yeah, go ahead. Sorry.
Yeah, that was great, Neil. We do have a couple questions, and then we've got a couple minutes here of buffer built in, so that's okay. First question is, how have your first two Opportunity Zone projects performed, and has construction started on those?
So we've been rolling these out about, call it 3 months, 4 months in advance of when we anticipate starting construction. So the first one is actually breaking ground in December, and that was a industrial deal out of San Bernardino, California, about $30 million total capitalization. The second one was a Mesa, Arizona multifamily deal, and that one is expected to break ground in early Q1 of 2022. So we haven't broken ground on either project yet, but we're fully set up to do so here imminently. And Locust is really right behind that, as I mentioned, with the April 2022 projected start date for construction.
As a Kim asks, could you tell us about how you're building housing in a green carbon reduction way? Is that a feature of your construction?
We've evaluated it. We have looked at the potential for certain aspects of the project to qualify for PACE, which is building efficiency. So those are built into the plans. Happy to take that one offline if we want to dig into a little bit more detail. And I think I would want to loop in our head of development, Sandy Schmidt, who had actually presented with us previously as well, in on those conversations. And
finally, we'll wrap up with this last question here. If we didn't get to answer your question, or if you have more questions for Neil, his email address is on the screen there, neils@starpointproperties.com. I'll type it in the chat in a moment too, if you want to just copy and paste it. But last question here for you, Neil, before we move along with programming today. What do you consider the benefits to the community, specifically the low-income residents in the Opportunity Zones projects where your fund is investing in? Do you have a benefits statement, or have you entered into a community benefits agreement with local nonprofits? Mm-hmm. What are your thoughts there on the local community impact that you're having?
Yep. So we have the full support, which is actually pretty rare, from the city of Long Beach and from the neighborhood groups. We do obviously focus on our ESG and what the impact is to the course, to the surrounding area. That said, I think that support and what we're offering to this community, and as it continues to develop, we're essentially investing alongside a number of different other developers and other groups that hopefully just contribute to the continued growth of Long Beach, that benefit the existing residents and all the future residents as well that are pouring into the city to as it continues to grow, with a lot of the other companies and groups that have made investments in Long Beach. So happy to talk further about our ESG. Happy to talk further about the project specifically, but I think that's essentially what the answer is at this time.
Fantastic. Well, Neil, I'll cut you loose there. Thanks for participating today on OZ Pitch Day Fall 2021. For those of you with additional questions, please do feel free to reach out to Neil. I put his email address in the chat. You can copy and paste it. Neil, thanks again. Appreciate it.
Thanks, Jimmy. Appreciate it.